How to record an asset and depreciation in QBO Part 2. So in Part 1, I showed you how to add the chart of account, which was the fixed asset, right? That's your trucker, that's your unit, the vehicle. All right, this is maybe truck 1 for you, maybe truck 2, maybe truck 3. And so we went into the chart of accounts, and then we went to set up the chart of accounts, and we were looking for the truck. Here's depreciation, here's original cost. These are the two sub accounts to that main account, that truck, which is the fixed asset. Okay, so let's go over it once more real quickly here. Okay, so your fixed asset is the vehicle, right? And then this is going to be, we're going to name this truck 1, right? Because you may have multiple trucks. Again, there's no restrictions on the name. Okay, whatever works for you. And then make sure we track depreciation here and the original cost. That's the value of the truck. And we just use the date. And I'm not sure if this is the same number as the previous example, but you get the idea, right? The concept doesn't change. Okay, so original cost, and then we're going to save and close. All right, so let's go back and find what we just put in. There it is, truck 1, fixed asset vehicle, 55 grand. These are your sub accounts, your depreciation, accumulated depreciation, original cost of the vehicle is 55 grand. All right, you with me? So then we looked at if a payment was made, like a down payment of some sort, you would actually create the vendor name here and the payment amount here. Okay. Okay, for consistency purpose, we're gonna make sure the category is selected truck 1 because we're assuming that we have multiple trucks, right? And we're only operating, or we're dealing right now with truck 1. We're recording the asset and the depreciation for truck 1. Okay, so you'll, like I said before, the truck vendor name here, and then you're applying that down payment because you're getting it financed, right? And so you made a $1,200 down payment. So that is what you're doing here by selecting the original cost, and that's going to apply to the original cost. The down payment is going to apply to that. Okay, you're going to click add there. Okay, so again, if you go back to your chart of accounts and find the account that we just created together, which was truck 1, because we have multiple trucks. All right, so you find truck 1, look at the original cost list, view, register. And then right now we're able to see that down payment that was applied against the original cost. Okay, so if you missed this in the previous session, I want you to pay attention to this, right? When you look at truck 1, and let's go to the 56200, click view register. I want you to notice something here. 1 is a journal. This is a journal entry, right? So we made that journal entry, or the system automatically made that journal entry. You don't want me to start drawing up T accounts, okay? And then this is an expense account, right? All right. So I just wanted to show you the difference. One is actual journal entry, one is an actual expense account. Okay. Now notice when we added that original cost, right here, click edit, it went to equity. Remember that? And so we know that this 55 grand isn't equity, right? It's not equity. It's actually a liability. So we want to change that. So I want to go down to liabilities, right? So how that works is your assets, liabilities, and then your income expenses. See that category is over there? Okay. So let's find notes payable. There we go. And then let's change this description to say the value of the truck, of truck one. Let's say value of truck one. Again, this isn't, there's no restriction on this. You do this as it applies to you in your scenario. All right. And then the notes payable is the loan value of truck one. All right. So just wanted to recap that. All right. So recap, original cost 55 grand. We changed the equity because it should say notes payable. This is a journal entry. And we changed the description to make it make sense for us, right? All right, so let's save and close. Now, if we go back to our chart of accounts, scroll over here, and let's find the notes payable. Right, remember you're going to always have your assets, your liabilities, equity, and then income and expenses. All right, but what we're looking for is our liabilities. Click View Register. And there's your loan value of truck one, 55 grand. Right, that is the amount that it's owed until it's paid in full. All right, head back to chart of accounts. Click in the corner up left. We're going to click new. Okay, so what you're gonna look for is journal entries. So you have customers, vendors, employees, and others. So under other, click journal entry. Okay, so we're gonna want to identify what the depreciation expense is, but we'll go over that in the next session. Okay, we're gonna kind of work backwards. So here we're gonna find depreciation. Okay, what you want to make sure you have is you're hitting the depreciation account, right? Just flat out depreciation. This is your depreciation expense account. You're hitting 354. Your accumulated depreciation is going to be under that sub account. Remember that sub account under your truck? So when you look down and that sub account for truck one, for your fixed asset for truck one, that sub account is your accumulated depreciation. All right. So you hit depreciation, debit depreciation, and you're going to credit accumulated depreciation. The accumulated depreciation is a sub account under your main account, which is your truck one account. All right. So that's going to be that. And what you're going to do here is save and close. Okay, so if you wanted to save that as a template, you could have scheduled it where it hits every single month without with a beginning and ending date. All right. So how do you do that is you click make recurring. I actually had to go back and find the journal entry, which if you're using QBO, you will click that button there to find your previous journal entries. Whatever accounting system you're using, you'll be able to find a previous journal entry. Make it reoccurring. You're just going to click make reoccurring, and you can name the template whatever you're going to name it. Schedule it monthly on the last day. Do the last instead. Every 1 month here. Okay. So again, you'll just name the template, right? And then you'll schedule it on monthly to occur monthly on the last day of every month, starting the beginning of the year all the way to the end of the year. You won't have that to worry about. Okay, and then you'll just click Save Template if you wanted to do that. Okay, remember depreciation is an expense, right? And your expenses shows up where? On the income statement. All right, so let's look at reports. And we should see that $350 of depreciation expense on that actual report. Let's see. Depreciation, there it is. It's under other expenses, $350, okay? Okay, and the same thing will go for your balance sheet, right? Okay, so you head back to reports, click on balance sheet. And we look for fixed assets, right? Again, you're going to have on your balance sheet, you're always going to have your assets, then your liabilities, and then your stockholders' equity or your equity. And so we're going to look under fixed assets, and then we have the truck and the original cost for truck 1. And then the depreciation is shown here. You can hide that if you don't want to see the detail of the depreciation, but the truck total cost is the 55 grand. Okay, so this is something that I wish not to do. I don't want to get into balance sheets and income statements in detail. This isn't a bookkeeping course per se, but I'll give bookkeeping tips, just enough for you to be able to manage, especially if you have an accounting background, be able to manage your books for your clients. So if you want to just take a stab at the balance sheet and try to understand it, you should be able to see the fixed assets that you just recorded for truck 1, right? Assuming that you have multiple trucks. This is truck 1. You could have truck 2, truck 3, and so forth. So there's truck 1, and then the original cost that we recorded was the 55 grand. We went over that when we created the fixed asset, originally created the fixed asset for 55 grand. And then we applied a $1,200 pretend. We pretended like there was a $1,200 down payment made. All right. And so that brought the total to 56.2. And that's where you come up with the original cost there. All right. And then, of course, accumulated depreciation is going to show up on the balance sheet. And that accumulated depreciation is based upon a table that we will go over in the next session. So the depreciation cost was $350, which brings it to $55,850. I hope that makes sense. I'm looking forward to next session. Thank you.